joining in with us again. But, Mr. Chakravarti, I want to also talk about in terms of the AUM growth that has emerged from the non-core portfolios. While a CV financing traction that stood at 3% on a quarter-on-quarter basis, indicating that the growth would actually have been weak if not for the merger. What is your take on that? You did mention a bit about the synergies also going forward as well, but if you could take us through this as well.
If you look at the disbursement versus addition to AUM, it will always be, since our tenor of loans are shorter, there will be a large churn in the book. So your addition to AUM versus your disbursement will be totally disproportionate. For example, we have done about 1,11,800 odd crores of disbursement in the current financial year. But if you look at the addition, it's just about close to 5%. So it's because of the churn. But I think what you need to what we are focusing on is more than on the growth in AUM. We would be focusing on the NIMs and basically the profitability, because with the shorter tenor products, it is very difficult to keep on growing at north of 15%. So the idea here is we will be continuing to grow at about 15%, but then the bottom line should improve. Bottom line, we would be focusing on improving the bottom lines.
All right. I wanted to get in a view, Mr. Chakravarti, as to what the outlook is when it comes to your AUM growth, because the rural areas clearly contribute a significant portion when it comes to AUM growth. And a lot of those customers have perhaps taken a hit. Have they been impacted by the interest rate hikes? Can you just give us context as to how you see your AUM growth headed?
On the interest rate, I don't think there is too much of an impact on my customers, because we have a very granular portfolio, and on our ticket sizes, an increase of 100 basis points, 50 basis points, 100 basis points increase in the rates would not make a lot of difference on the AUM. So that's not we don't see any stress there. And in fact, if you look at the commercial vehicle market today, the freight rates are firm. Vehicles are actually plying for longer distances. They're able to get return loads. So the earnings, they're actually, the operators are actually making good money. So I see a very little impact on the current rates.
All right, let you go on that note. Appreciate you taking the time out and joining in with some key takeaways on how business is shaping up and, of course, the merger synergies. Moving right on then, just remarking some movers in the markets. PI Industries, it's clearly reeling under pressure.